What's going on, YouTube? In this video, we're going to talk about FedEx, ticker symbol FDX. Over the course of 1 year, this company's down 80, or sorry, this company's up 87%. Year to date, this company's up 51%. On FedEx, we're going to go through some company comparisons. We got 4 other companies compare FedEx to. We're going to take a little quick summary of their financials and see how their financials are looking overall. Go through a few calculators on this company to figure out a fair market value on FedEx. So let's begin here at the financials. So obviously most of us know FedEx is a delivery service, right, for your mail, for packages and stuff like that. So we're going to scroll over here. We got some charts to look at. We got our numbers, our most recent 2022 numbers, our trailing 12-month numbers as well. Overall, our revenue, we can come up here and see our revenue, our gross profit, and our net income. Okay, our revenue is growing, our gross profit kind of growing, our net income not growing. Something to keep an eye on, you know, if you're going to invest into this company, to figure out maybe why, what are they doing that's causing your net income not to grow with everything else. Okay, our net margin percentage wise pretty flat. We're staying about 21%. Our net margin, in my opinion, I don't like low margin businesses like this one, but maybe you do. But this one's sitting at about 4.5 to 5% net margin currently. Our revenue to our gross income year over year change, we can see kind of just a roller coaster. Right now we're in the lows, you know, kind of matching up with 2020, 2019 lows here. So kind of, you know, we're not, it doesn't seem like the company's growing anymore. It seems like we're just kind of flat. So far, that's what it looks like to me. Our year over year growth, this is including net income. Obviously, we have this big spike in net income of 307% because that's thrown this chart off quite a bit here. But overall, you can see actually very, ever so slightly an increase. You have your net income at 9%. And we can come over here. We got these, our gross profit and our revenue actually negative. And we can see that over here as well, where our net income is actually, it had grown by not much, but it has grown, whereas our revenue has not, and our operating income also has not. A little further down, we have our return on invested capital is heading in the wrong direction. Our overall chart or trend over to me is showing from 10%. We're just slowly declining. To me, that's a bit of a red flag. You know, that kind of tells you how inefficient the company is with using investors' money to make more money, right? So if they're only making like, I don't know, 4% on our money, that's not ideal. We want to see at least 15%. At least I want to see 15% or more return on invested capital. Cash to debt, tremendously large amount of debt and very little cash on this company. Our net income to free cash flow is respectable. Usually, whenever your free cash flow is a little lower than your net income, that's okay, in my opinion. When your free cash flow is higher than your net income, it might tell you to look deeper into the company as to why we're making more money based off of non-operating income, right? So a free cash flow, we can kind of see, kind of just crappy, and then all of a sudden we just out of nowhere, boom, exploded. So our free cash flow has actually been pretty decent for this company in the last few years. Share count also heading in the right direction. We are slowly declining in share count, so that's good as a shareholder. So now we have a couple comps. We have 4 other companies to compare to. We have UPS, ZTO, CHRW, and EXPD for companies to compare FedEx to. Okay, so we're going to come down here to some charts, how each company compares to FedEx. So we have our market cap. So UPS is the leader in the market cap right now. Behind, next up is FedEx. After that looks like ZTO, number 3. Revenues, gross profit, and income, we can see in order. We have our revenue to gross profit to net income. UPS is the leader in revenue, followed by FedEx, and then ZTO. But you can look at the next part here. So gross profit, FedEx becomes the leader, and then looks like UPS and ZTO are relatively close. But here's where things change again in net income. You know, FedEx loses the lead. It is now like 3rd in line between its other 4 comparables here. Something else to kind of keep an eye on. In my opinion, ZTO is something to worth looking into further. based on what I'm seeing already. So our 5-year growth EPS based on analyst expectations. FedEx, we're looking at pretty big growth here. However, ZTO is looking like it's going to explode. And so again, something else to maybe look into on ZTO. Gross margin, 20% ZTO. There we go again. Operating margin, uh, less than ideal at 5%. And then here's ZTO. Profit margin, FedEx sitting at 4.7%. As always, ZTO is the leader. Free cash flow, $3.2 billion free cash flow, pretty good. ZTO is the second from third. Return on invested capital, the worst out of all of them. And our PE is second from last. So price to earnings, that you want to be not second to last, second from first, really, because lower the PE, the better value you're getting for the company, right? In terms of what you're paying for it. So we can kind of see right there our comps. FedEx, in my opinion, doesn't seem to be the leader of this group of comparables anyway. I think actually ZTO, which is a company I've never heard of, which is a company I think I'm going to look into next, honestly, and see what this company has going on because I like everything I'm seeing here in terms of comparing it to other companies. I do like the operating margin, gross margin, and profit margin, and the return on invested capital. It's got a lot of good things going for it. So, anyway, let's keep moving on. So then we've got all of our calculators for FedEx here. Peter Lynch gives us a $301.91 fair value. Our multiples gives us $281 per share. We have 12 years before we earn our current market cap, so that's pretty good. Anything below 20, in my opinion, is solid. Price to book, we're staying at 2.53, 5-year average 2.37, so we're right in line. Price to earnings compared to growth ratio, currently sitting at 5.16, forward looking 3.8. I mean, there's just no current growth in this company. Per analyst, they were saying 18% EPS growth, but our revenue growth is sitting at 3%. So there's not too much for growth here. Graham's valuation, we're given $392.23 per share. Our DCF, we have analysts expect growth rate of 5.7%. Our discounted or weighted average cost of capital is 4.95, perpetual growth rate 2.5. I gave it a 5% free cash flow growth rate, and that gives us a discounted cash flow price per share of $342.46. Rule 72 down here. We have our EPS, our current PE. We have three different analyst growth rate expectations. So I take the average of the three, and we get our growth rate of 7.77%. 7.77 goes into 72, 9.26 times. 9.26 goes into 10 years, one time. So we get to double our current EPS one time. So that gives us a EPS of 32.74. I rounded up to 33. Gives a fair value of $120.19 per share. $89.73 with 30% margin of safety on that one. So over here, our summary of this whole company for valuations is FedEx. We have our PEG. We have all the valuations we just talked over here. And we have also an analyst price target of $268.52. So it's something to also I like to compare it to a little bit. I don't try to skew anything towards analyst expectations or numbers. I like to use my own numbers and my own calculations. I trust mine more than them because I know where I got mine from. Fair market value that we have on all of our calculations is $276.05. So we're basically in line with the current price, right? Currently traded 267, we're $9 away. So with a 30% margin of safety, an acceptable buy price for me is $193.23 if I was to want to buy this company. However, that's only part of the fundamentals. It is always a good idea to look at the other side of the fundamentals, such as the news and the company forecast, and go to their earnings call and figure out what the company is saying about their future progress and what they're going to do to increase their net income. Because that was one of the big things that I saw is, their net income. They got, what was it, 4.7% of their revenue goes to net income. That's not much. I know they make a lot of money, but they're not the leader in their net income. Now on the stock chart over here at FedEx, we are in this macro uptrend. just every time we touch this trend line, we continue higher. We last week touched it again on earnings and have now resumed higher. We do have this somewhat of a downtrend that it could be a resistance point on this company, but with how hard it popped into this, I think we're going to break through and continue higher, maybe hit up to 300 range, 285 to 300 range is my guess on price action for this company in the short term. So I don't see any reason to currently, if I was holding, I would probably not sell. I'd probably maybe look to lighten my load at like 300-ish dollars a share. But otherwise, I'm gonna just, you know, since I'm not in this company, we're looking at a fair market value or a 30% margin safety price tag on this company of around here, around $195 a share. It's probably going to hit 300, so it'd be about $100 away from where I'm getting a fair market value. In the short term, looks like it's gonna head higher. Could be actually make for a decent swing trade slash day trade, but for a long term hold, for me, I want to see I want to see a better how I trade anyway. I like to get a fair market value, so that way if I'm gonna hold something for the long term, I want to get the best ROI for my money. But that is it for Fedex. If you found value in this video, drop a like, subscribe, comment, and we'll be back later with another stock analysis video.